The biggest concern maybe at the moment is the over-indebtedness through the likes of buy now, pay later, BNPL. The regulators have really come out and are looking at it. The FCA has announced regulations for BNPL will come in play next year, 2026. The EU's revised Consumer Credit Directive is also bringing through some standards, etc. There's a lot of concern over the fraud around BNPL, which has really been going up, and fraudsters have been capitalizing on the rapid onboarding and quick identity checks.
Welcome to the Issuer Academy, Paymentology's podcast to innovate, scale, and provide impact. I'm your host, Merusha Naidu. If you're a fintech professional, banking leader, or an innovator in the digital payment space, you're in the right place. Here, we deep dive into the challenges and triumphs of launching next-generation card programs, from virtual cards and digital wallets to cross-border FX solutions. Let's get started. Welcome back to the Issuer Academy. I'm your host, Merusha Naidu. Today, we're tackling a theme that sits right at the intersection of finance, technology, and impact, global investing, and democratization of finance and the financial inclusion these investments bring. And the timing could not be more relevant. In Latin America, Brazil's new bank has grown to serve more than 80 million customers, many of those customers holding a credit card for the very first time. In Africa, mobile wallet platforms like M-Pesa have helped to drive account ownership from under 25% to just over 55% in just a decade. And in Southeast Asia, we have super apps like Grab and Gojek, who are not only transforming transport and commerce, but also offering millions of drivers, riders, and small merchants access to digital wallets, microloans, and even insurance for the very first time. So today, we'll explore what is driving these changes and what role global capital plays in making them possible. First off, we have Adam Battersby, partner at Apis Partners, who brings first-hand experience from investing in financial services and fintechs across emerging and developed markets. Welcome, Adam.
Thank you. Great to be here.
Next up, we have Joy Macknight, a leading journalist and commentator on the global banking industry, who's been covering these shifts for years. Welcome, Joy.
Thank you so much for inviting me, Merusha.
Perfect. So let's dive right in. Let's look at the human side of inclusion. Adam, Joy, before we get into the technical side, can each of you share a story that stuck with you? Perhaps a moment where you saw firsthand how investment or technology changed someone's financial reality, whether it's a small business owner, a first-time account holder, or even your very first experience in the field. Joy, let's start with you.
All right. Well, in actual fact, I wasn't going to do a first-hand example, but I was in Mumbai for the Women's World Banking Conference Summit in 2023, and they had this fintech challenge that they were doing. And one of the co-winners was a South African global startup called Paycode. And they use a smart card-based payment system in order to target unbanked and underserved populations, particularly in rural and semi-rural locations. And they really targeted women, which I thought was so interesting, right? So they're trying to financially include women. And of course, lack of access to financial services is really down to three things: identity, connectivity, and cost. And then so Paycode is able to issue these biometric smart cards in under 5 minutes in remote villages. And the card can be used for any financial transaction online and offline, so sort of like a debit or credit card. But in Mozambique, they talked about the use case that they were doing at that time, which is they were issuing these cards in Mozambique, and the women could use their Paycode card to receive payments for their goods, as well as make payments for food, utilities, school fees, all of that kind of stuff, right? Which was really amazing. But they could also apply for microloans, etc. So that made a huge difference for their lives, like it was life-changing. But I thought the most interesting thing was what they added on at the end, which is this specific innovation, because the Paycode solution was actually used to protect women that might be under pressure to hand over their money and their savings, right? So a woman could find herself in a situation where she's being coerced to give her wallet funds to someone else, right? And so their smart technology enables her to place a pre-selected finger on the scanner when withdrawing the money, and that will show a lower balance than what she actually has, so that the woman can always be in charge of their money. And so for me, that was quite mind-blowing because it was very targeted specifically to women and some of the challenge that they face in small villages, etc. And so the technology itself just helped women change their whole life around in terms of being able to access funds, etc. So I thought, I know that wasn't quite firsthand, but I just thought it was such an interesting and additional innovation that really directs to help women and financially included women.
Absolutely. Honestly, that story is just giving me goosebumps. That's so, so incredible because it's taking technology and really looking at a segment who are under pressure, don't have access. Across so many African countries, we see women starting off these really small SMEs, selling goods or even just making things that they're selling just to supplement their income. And this technology is absolutely incredible. It's really giving power back to the people, but doing it in a way where it actually makes sense and they've understood the pain points of the customer. Incredible. Thank you for that, Joy. Adam?
Yeah, I'd probably take a similar approach, maybe taking a step back from the question a little bit and talk about what we see in practice in our portfolio as well, some of the outsized impact. In the intro, you mentioned Nubank. So I feel almost forced to have to mention one of our portfolio companies, TimeBank, in which Nubank has now taken a strategic investment, but they've onboarded millions of customers into that banking system for the first time. We also have Peach Payment, which helps embed those digital acceptance into the SME space. And then flipping it a little bit, making it a little bit more global. In the UK market, we've got a company called Moneybox. It helps first-time savers. So UK market, is it having impact? It absolutely is. It's using tax-efficient ways for people to save. There's a great product in the UK market called Lifetime ISAs. These allow people to save up to buy their first property. There's various UK tax incentives to do that. But then not everyone gets that opportunity to buy a property. It then flips into a pension product. So there's all these little ways we can use technology to actually lower the cost of entry. I think one of the other transactions we've recently done is Leap Finance in India. So here it's really interesting, right? If you think about Leap Finance, it very much helps students find universities overseas. And now how do we embed that finance piece to help them actually finance that journey? And you've got lots of people going to university for the first time through that. So there's actually lots of different ways to create impacts. And I just felt that was quite an interesting sample. We've gone from SME, we've gone to students, to first-time house buyers, and also that first entry into the banking system.
You're covering so many different demographics, which I think which is so exciting because the nature of customers has changed. That profile of customers now is so diverse. Like, for example, I would like to be a first-time owner in the UK, which is something that's really new. Whereas at the same time, looking at TimeBank in South Africa, what they've done, their kiosks was absolutely groundbreaking. I think we had one of the VPs from TimeBank on the podcast a couple of episodes ago. And the level of innovation is absolutely incredible, but it all stems from understanding the customer, understanding what are you trying to solve for. I mean, first-time university goers, that is a market where we've seen a lot of kind of cards for students, but really understanding how are they using it, what are they using it for, where are they using it, how do we create control but also safety. This is the kind of innovation that really gets us excited.
But I also think that financial inclusion is so much more than just a bank account. I think everybody just thinks of it, they're like, oh, it's people that are unbanked and things, but it's actually that whole underserved and the needs that people have and SMEs have, etc., all around the world varies greatly. And so you can make really tailored products. I think it's amazing.
Absolutely. And every single segment is slightly underserved. So if you look at SMEs, yes, that's a big, bold one all of us know about. But then you have insurance, completely underserved. So there's ways for us to innovate across all of the different segments if we just think outside of the box. So I think what you guys are doing at APIS, fantastic.
I just loved how you phrased that, the financial inclusion evolving, because I think that's exactly how we see the world, right? So it's great, the financial inclusion, getting people bank accounts, getting people the ability to make payments. But actually now, and it's almost the theme of this podcast, is this democratization of finance, right? And for us, we just see that as evolution, right? It was about payments, it was about banking, but it's now what other financial products can we get into people's hands?
Absolutely. And that's so true. And the question is, why does democratization of finance matter, right? So if you zoom out, we've seen billions of dollars of private capital flow into fintechs in just the last decade. But what's unique now is that investors are talking less about disruption for the sake of disrupting, but more about access. So when we look at democratization, it's becoming more of a core investment thesis, if you will. Joy, from your vantage point, how has the narrative shifted? When did inclusion move from being a CSR exercise to being central to the future of financial services?
I just think there was a huge mind shift when it came to the eruption of the fintech wave. And I think a lot of fintechs were showing the way in terms of just the possibilities of what could be done. Obviously, banks have done CSR things for like decades, but it wasn't really moving the needle as such. And so I think the real shift happened maybe around 2015, 2016, where these small agile fintechs were really looking to address this sort of knotty problem and also just like increase the customer pool as well, which was really incredible. And of course, I think at the same time, what you saw was really the cost to serve these customers start to come down, which I think is another important angle, right? And so the technology that these fintechs were using were like cloud and AI and all that, the beginning of AI and all that kind of stuff, all of a sudden opened up this possibility to be much more personalized in what you were delivering, etc. I also wanted to bring in the Sustainable Development Goals, because I think that was another big push, because then all of a sudden the governments were like thinking about it. And you think about the 17 goals, almost half are directly or indirectly linked to financial inclusion. I would say much more than that. I was looking it up and I was like, financial inclusion could touch almost every single one of them. But all of a sudden it became a big government focus. You saw lots of money invested by the governments, but by VCs, impact investors, etc., to solve this problem. Obviously, all of this predates COVID, but in actual fact, COVID really turbocharged it. And you saw everything changing very quickly. But I think the banks also realized they were losing out to these fintechs, right? Because it's not just about the customer today, but it's about the future customer as well. And if you don't bring them into maybe not quite the traditional, but at least bring them into the framework of traditional finance, etc., then you're missing out actually on the future customers as well. Obviously, it took the banks quite a lot of time because they're a bit slower to implement this new technology, but obviously they're ramping up. And then again, there's been a lot of collaboration between fintechs and banks, etc. So fundamentally, I think the banks have realized that this is the future of financial services, and just serving a very set group, whether that's the people that aren't financially excluded on the one hand, but also the big corporations, etc. Like the SMEs are really in desperate need of decent financial services. And I think the banks have realized that, again, they've excluded a huge swathe of the population that could be their customers.
Yeah, absolutely. And when you look at it, traditional banks were quite bullish, where they kind of said, okay, this is the segment that we're serving, and okay, the cost of acquisition is reasonable, we're making enough money, great. Then all of a sudden, these disruptors came in, they were like, hold on, we actually need to think twice. And I mean, there was a study, 75% of SMEs are underserved. And the fact that in this day and age, that is the percentage is crazy. So I think that's one of the things that I love about fintechs is they're really helping to drive banks into thinking differently. And that's what we all need to do, right? Really just think differently about why these things matter. Adam, I want to come to you. At APIS, you said your mandate is about both growth and impact. When you talk about democratizing finance, what does it actually mean in practice for companies you back?
Yeah, so when we take that step back, I'll pick up a few of the comments that you made. That technology layer is actually really important. That's that transformational change in cost, right? So the companies we back typically are digitally first companies, because when you've lowered that cost to serve, you can actually serve a much broader subset. And I think the other big thematic piece maybe to highlight that is pretty consistent, and one that I think we first wrote about over 10 years ago, is the embedding of those financial products and how there's actually an interplay between this democratization of finance theme and the embedding finance theme. If you embed the finance in pre-existing workflows, you actually bring it closer to the customer. And so these allow you to lower the cost because you've lowered that customer acquisition cost that you were just referencing for the incumbent banks to almost zero because it's naturally there. And again, we've lowered the cost again, which means we can offer more products to more customers. So I kind of find it interesting that all these different themes actually interplay, and that democratization of finance theme is actually a wrapper for much, much broader ones. And again, I'd probably just feed it back into how broad this impact is. We've spoken a lot about payments. We've spoken a bit about banking. It's the lending side of it. It's the insurance side. It's the wealth. And every single one of these is impacting millions of people. It's people's actual daily lives. But that drawing in of the embedding of finance theme. So when you're making that purchase decision, is the finance available there? When you're considering the insurance, what breadth of product are you being offered? These are all the levers where actually you start seeing the commercial aspect matching that impact aspect as well.
Yeah, and I think that's a really, really important point because the two go together. And I think that's what is so interesting to say to any financial institution now is to say, look, if you offer the right products for the customer, the revenue, the profit will come, right? Because we already know it's underserved. 67% of, let's take Africa as an example, is underserved, right? Customers have no choice. But if you offer a really good solution, which meets the needs of the customer, answers a couple of pain points, but also it doesn't have a crazy cost associated, customers will gravitate towards it. It's what we've seen with M-Pesa. We were talking about Orange earlier. They really understood what their customers' needs were, and they invested in the right areas. And so you're absolutely right. It's about bringing the two together.
And actually, a really interesting point on that one is you're actually increasing the addressable market. You've made that market bigger now because we've lowered the cost. We've included a whole load more people into that space. You can actually have a high growth business or business line within that large incumbent. So again, everything starts matching back together. And I think that's our philosophical position almost on this, right? We call it returns with responsibility. And it's this concept that there is no trade-off. The impact and the commercial piece are not two separate things to consider at all. A well-run business targeted in the right way, it's a great side product to these impact benefits.
Yeah, love that. So I want to take a little bit of a deeper dive into the regional perspective, right? So let's look at the Middle East, Latin America, Asia Pacific, UK and Europe. Of course, democratization of finance looks very different depending on where you are. In some regions, it's about giving someone their very first bank account. In others, it's about lowering costs, like you just said, expanding choice, or making financial services fairer and more transparent, right? Adam, you've invested across MENA, LATAM, APAC, Africa, Europe. How do you see the drivers of inclusion and democratization differing across these regions? And where is global capital having the most impact?
Well, first, I'm going to be a little bit controversial to the question.
Go for it.
I'd say the way we actually look at this space is quite interesting because we take a global view. So as you mentioned, our footprint, we've teams in London, Dubai, and Singapore are kind of three main hubs, but we actually run a single pipeline. And that's quite interesting, right? So we join a single call. We get to understand actually how the markets are developing, what the investment themes are. And probably my most interesting takeaway from that is there's more similarities than there are differences. So actually, this again is quite important to how we think about the space more broadly, is we actually run one set of investment themes on a global basis. There are nuances between markets, don't get me wrong, but again, that's quite important. So the democratization of finance theme for us is a global theme that has as much impact here in Europe as it does in the Middle East, as it does in Southeast Asia, as it does across Africa. The embedded finance theme that we've actively invested in for the last kind of 10 or so years, again, we see that in every single market we operate from. I do think it's fair to say that there are differences. These markets do start from very different positions. The infrastructure that's already there or the access to banking services. So there are nuances, but actually the thematics are very similar. And a lot of those are what we've already discussed, the technology layer alone, the cost base. But this macro kind of inclusion, this democratization of finance, to us, it isn't a CSR exercise. It is this global growth theme that we think allows us to combine that impact with scalability and potentially even merge some of these markets as well. How do we bring companies from emerging markets to developed markets? How do we bring some of the great innovation from developed markets back into emerging markets? And it's not a one-way street. We see tech companies that are light years ahead of European fintechs in this space. And being that bridge between those two markets, I think is great as well.
Yeah, absolutely. And I couldn't have said it better. Those waves come and go, right? So, for example, what we're seeing worked really well in APAC a couple of years ago is what we're being asked for in LAC. But at the same time, we're being asked for the same technology in Germany because they're slightly behind the rest of Europe. So you're absolutely right. Every single region can benefit and learn from each other based on where they are within that wave. When we look at financial literacy and inclusion, a lot of the literacy that we've done in APAC 5 or 6 years ago, we're now doing in Greece, in Germany, in other parts of Europe. And it's like, oh, wait, okay, you have legacy platforms. You're new to digital. But we did it in APAC 8 years ago because there was no other option. Customers needed a solution. So you're absolutely spot on.
That's a great example of that kind of reverse innovation coming across and back into Europe. I think it's super interesting. And one more piece to mention of this kind of globalization actually in action. One of our portfolio companies, Coda, we worked alongside to acquire a business in Europe called Recharge. So this is the digitization of payments in macro. One does e-gaming, the other does prepaid cards. You can kind of see how the footprint of customers would be very complementary. The geographies are very complementary. One very dominant across Southeast Asia, the other very dominant across Europe and growing into the US, combining those two businesses to build that real global competitor in that space. The theme's the same, the users are the same, the demands are the same, the technology at the back end is fundamentally the same.
Absolutely. We're seeing a lot of that as well, where lots of different companies saying, okay, we started off in the Middle East, but now we want to expand into Europe. We want to maybe look at Singapore. And they look for markets where, like you said, the pain points and needs are the same. And so those can easily be transported to any region globally.
But I do think it depends on the regulatory environment, obviously, right?
Thank you.
I think that is the pain point everybody faces. But I do think it's been a very interesting journey for the regulators as well, because I just think about, so the FCA started up its regulatory sandbox, etc. Then Singapore Monetary Authority of Singapore did that. All of a sudden, they're also at that global level starting to interact much more. And I just think that in terms of like open banking, for example, right? Again, the UK came out first and Europe not far behind, but then it just spread across the globe. But I love it the way, let's say in Brazil, they actually tied open banking with consumer control over their data, etc. So there was much more data protection. Like I think they learned from the mistakes that were made previously and then could see how those two link together and then could scale quite quickly once you have that. So I think it's a very interesting time. I think the regulators are talking more than they ever have before. So it's a positive thing, but regulation is still the bugbear.
Yeah. Absolutely. And I think you're right. Regulators are definitely learning from each other because now we're seeing similar sandboxes come up in the UAE and Saudi, and they're replicating what was done in Singapore and in the US. But we still see regulators being a challenge, right? They're more open. They are getting more transparent, right? Where we really struggle in understanding is where regulators haven't caught up with the technology. And so because there is no regulation, it's kind of like, oh, we're not there yet. You got to wait. And so that can sometimes hinder the technology, or the needs of customers are not met because we just can't service them yet.
But I think about that cloud technology, right? For so long, banks weren't allowed to go near it for like love nor money. And then all of a sudden it switched. And so that is huge. And I think data residency is still quite a big issue in a number of different markets. Middle East, for example, definitely. So there's still a lot to be done, I'd say.
A lot for us all to do. And we're actually seeing data residency in some markets which used to be opened. And I was like, oh, wait, we need to close it up.
I think to your point really about regulators staying abreast of technology, but I just think it's so difficult, right? I think the MAS does it very well. Singapore does it very well because they pretty much make everyone get in the room and they really discuss it, right? Whereas other countries don't have that luxury really to do that. I would say it's very difficult to stay and to really understand what kind of impact different technologies are going to have. So I think the regulators struggle, but they're really trying to upskill themselves. So that's a positive, right?
Absolutely. And Joy, I'm keen to understand from your reporting, is there one example that really stands out?
So obviously, something can be super successful when it has the backing of the government and all the players, right? So that's massive. So I think about India, right, which has done a pretty amazing job with more than 1 billion people. Its financial inclusion strategy started with Aadhaar, right, which is the India's biometric identity system, which was launched in 2010, so 15 years ago. And it has this national ID database, which allows KYC, know your customer, to be done in minutes, right? So that was a real game changer. And it was interesting because I did this interview with the Infosys chairman, Nandan Nilekani, who worked on Aadhaar, about the acceleration of financial inclusion using digital technology. It was a fascinating interview, actually. But then Aadhaar was the basis also for the India stack, which comes back to the whole technology piece to it. So the country's digital public infrastructure. Now a lot of other countries are looking how to replicate it in many ways. So it had digital ID, which is Aadhaar. It had real-time payment system, a unified payments interface, UPI. And it also had the open banking framework called Account Aggregator, based on principles of data empowerment to allow individuals and businesses to share data and access to credit. So I think that's amazing. And again, I was in Mumbai for this World Women's Banking Summit, and I met Rajesh Bansal, who's CEO of the Reserve Bank of India Innovation Hub, which was set up maybe about 4 or 5 years ago. And he was also a founding member of Aadhaar and played a key role in creating India Stack. And then he was focusing again back to, because it was the Women's World Banking Summit, he was focusing on working with providers to create new products and processes to enable women to access savings, payments, and credit. He was working with a fintech startup focused on providing frictionless savings products to women to help them save it digitally, and then also launched a study on migrant women to understand how they can use UPI to send money home, etc. So I think it's this coming together of this whole system, and I think that digital identity is a huge part of that, but it's the coming together of it all, right? And then again, allowing the innovation to really happen on top of that. So you need that policy innovation on one hand, but then you also need to let it out to the market and allow innovation to happening. But it's so interesting because that RBI Innovation Hub, they're working with regulators, with governments. They're really trying to make policy more proactive to enable that innovation. For me, like, it really stands out. And I think a lot of countries around the world are trying to emulate that. And I think they do really have to start with that digital identity.
And that digital identity, as much as we always say KYC, AML, that's the boring part of it. But it really is the fundamental building block to build anything on top of. Because once you do that, once you've identified the customer, you know who you're dealing with, you then can say, okay, now I can offer you different products. I can offer you different services. I can really grow your profile and then look at you as a customer, not for now, but a customer for tomorrow. But it's that one piece. And I think that's what so many regulators and even banks need to really hone in on and say, okay, what is that one piece that's going to change the game for us? That's such a wonderful example. Thank you for that, Joy. Next up, I want to look at the partnership angle because Adam, obviously, apes have wonderful partners globally. One theme that comes up again and again is that no one player can do it alone. Real change happens when investors, fintechs, banks, regulators, and even telcos come together. So Adam, when you look at portfolio companies, what kinds of partnerships are critical to scaling financial inclusion, banks, regulators, or telcos?
Yeah, I think just with that focus on the regulatory framework, and they're almost building blocks. You have the KYC piece, do you have the UPI ability to settle payments real time? Those regulators creating that enabling environment is actually key for all this innovation. And we've talked on a regional basis. The reality is it's much more complicated mosaic on a country level, especially from that regulatory perspective. So I don't think you can talk partnership within financial services without that nod to the regulator of having that as the foundational piece. My background before I was at APIS, I was actually at Bank of America, running their principal investments there. So I've been on that bank side, and I actually think banks have a very important role, even within the fintech ecosystem. They actually provide infrastructure at scale, which is super interesting. They provide that trust environment. They can provide that compliance environment. So some of the most successful fintechs actually have these really deep relationships with the guys there in the old sense would have been disrupting. I think we're all moving away from that. I'm not sure we ever fully bought into it at APIS anyway, of innovation, digitalization is what we're pushing, not necessarily disruption. And so those are two almost foundational legs of that partnership base. I think, again, just trying to wrap the conversation around, we've talked a lot about democratization and finance. I've talked a lot about embedded finance. Actually, when you look at this space of partnership and then you think of it with this embedded finance lens, it gets super interesting because now we're not talking about those traditional members. We're not talking about the banks. We're not talking about the regulators. But now we can take the step back and say, should I be partnering with a payment processor, merchant acquirer? Actually, take another step back. Should I be partnering with a telco because they've got some amazing reaches in these regions? But actually take another step back again. Should I be partnering with someone that just has those client relationships? It's now we're embedding those financial products, that lending product into maybe a travel decision or the ability to bring these products close to that purchase decision. I think that's when it starts getting really interesting. So now I'm saying you need to partner with the regulators, you need to partner with the banks, but actually think even broader than that. How can I take the financial product I'm building and how do I implement that into pre-existing behavior of end customers?
Yeah, absolutely. I think when you look at it, everyone just thinks, oh, traditionally I need regulators, I need a license, I need just a technology. But in actual fact, you're so right. It goes so much deeper. If you really understand your product, you can enable it and embed it in so many different aspects of the payment experience or the customer experience, right? And we're seeing that happen a lot. So let's say, for example, Agoda, travel. Yes, okay, I used to be able to just book my hotel. Wonderful. But now I can do flights, I can do experiences.
You can probably buy the insurance.
I can buy the insurance.
You might be able to get 30 days to pay.
There's so many different things to do. And it's just really understanding how far are we willing to push it. And this is where I love data, right? Because data really allows us to say, oh, okay, there's a gap. Customers are using the card not in the way that we thought. What else can we do? What else can we offer them? And so I think coupling data with making sure that you're partnering with the right people in the right areas is absolutely key. So absolutely fantastic point. The other thing that I want to ask, Adam, when it comes to looking at the different types of companies that APIS looks at, I know that regulators obviously do shape a lot of the investments in different regions. Is there any specific region that you're looking at right now that's most attractive to you?
I don't think we look at it that way, right? So I think, again, we map the opportunity set on a global basis. It may be some kind of relative comparison region by region, but we're still seeing exciting innovation, often along very similar themes. So we do a lot in the payment space. It's been a significant portion of our track record. But we're seeing exciting payment companies in Europe. We're seeing exciting payment companies in Africa and Southeast Asia, and a wealth piece as well. The savings products and so on. That's not just a European opportunity. That is across the Middle East, that is across Southeast Asia. So I think we often struggle to spot those differences. I think it's fair to say there's better regulators and worse regulators. I don't think you'll get me on record saying which are which, but there's some that are significantly ahead, right? In Europe, the UK probably stands out. When we talk about Europe as a whole, you're actually talking about ECB, but then a very complex network of regulators underneath. There is coordination. It's great to see when it does happen. But you go out in Southeast Asia, you mentioned Singapore, great regulator, one with a great track record. But then you've got another 2 dozen regulators that are meaningful in that region. So any coordination they can do, I think, is super helpful and will actually allow more innovation, more impact into those markets. I would say we're seeing it improving in almost every region that we're operating on. And I think credit to the regulators to a certain extent, that is some of those leaders then raising the standard on a more regional basis as well.
But I also think it's interesting the role that the Bank for International Settlements is playing in terms of its innovation hub, etc. Obviously, they're doing a lot of central bank digital currency experiments, etc. But they're really pulling together central banks that I wouldn't really have thought would get together. So I think they're really driving forward on that global level, which is really important.
a lot of this happens without people seeing it, right? As well, so CLS would be another organization that does a lot of work in that space, worth mention as well, that there is actually quite a lot of collaboration and coordination there, but it's really helpful from the investor perspective when we see that happen.
It's always a positive sign when you see that happening, because then you know things are moving in the right direction from a global perspective, which is fantastic.
But you're right in the sense that sometimes it moves forward, sometimes it moves back.
Yes.
Never know where they know, right?
That's so true. It's like, oh, we get a little bit nervous. Let's take a couple of steps back.
Oh, yeah, we're back.
Joy, what's your perspective? Where have partnerships between unlikely players, say banks and fintechs, or telcos and impact funds, really moved the needle?
I think there's just so many examples. It's very hard to choose one. But I decided to choose one, and it's sort of a nod to Adam's comment about embedded finance, etc. I remember seeing there's this lash up between HSBC and a Nordic fintech called TradeShift, which is an invoicing automation platform. And when I saw it, I was like, that could really move the needle for SMEs. And that was in 2023. At the time, I think maybe a year or a couple of years before, I'd written an article on the 1.5 trillion trade finance gap for SMEs, right? And so I was like, this is huge. HSB, one of the largest trade banks, etc., with this trade shift. And I think I did interview trade shift in one of my Tech Talk videos. So at the banker, I did 5 years of Tech Talk videos, really trying to pull out all the fintechs and some of the interesting things they were doing. So to give banks who didn't have access, didn't have like a Barclays Rise or their own innovation center, to see what these fintechs were doing, etc. So anyways, they were pulling together for this joint venture to support SME suppliers and to build like a whole streamlining the process to access finance and simplify trade, right? Which I think is so important. But then I realized, because I was doing some research, and then in 2024, like October last year, they went on to launch a jointly owned venture called Semfi by HSB, which aims to deliver seamless embedded finance solutions to business clients, right? And again, I think this is going to really shift the needle. And I know you say unlikely players between the banks and the fintechs, but I have to say, I think we mentioned it earlier, which is like maybe at the beginning there was a bit of panic from the bank side thinking, oh, these fintechs were coming to eat their lunch and stuff like that. But really, it pretty quickly shifted into more collaboration. So to me, it's no longer sort of unlikely in that sense. I think it's very likely. And fintechs have also realized that they're not going to be able to eat the bank's lunch just because of the massive amount of clients that the banks have. And it's better to partner and then, again, be able to deliver and new technologies, etc. So I think for me, that was one thing that I was just like, oh my God, that could really make a huge difference for SMEs trying to access finance.
Absolutely. I think often we see, like, we always talk about, oh, disruptors and they're coming in to disrupt the space. But in actual fact, in many cases, banks actually enable fintechs. They've been sponsor partners. They provide the KYC and AML solutions. What we've really seen is, in many cases, banks can actually help to grow the fintech business just by partnering up and saying, okay, as a big bank like HSBC to back a fintech, you immediately give that fintech credibility. And so it can be a very complementary partnership. So absolutely right. Right now, when I look at a bank and a fintech, definitely not an unlikely partnership. In many cases, it's quite a fruitful partnership where it's mutually beneficial to both parties.
Yeah, I think so. And then it's also the investment, right? So a big bank like HSBC or another can actually give money and help the fintech actually really develop much quicker and doesn't have to be in the throes of like different investment cycles, etc. So in that 2023 lash up that I told you about, in actual fact, HSBC was investing like 35 million into this new platform that TradeShift was going to provide. So it also has that, there's a lot of investment going on there as well. And then the bank can also help shape the product at the end of the day.
Absolutely. Adam, obviously looking at the investment piece, anything you'd like to add to that?
I guess this was my job when I was at Bank of America and before that Merrill Lynch for 10 years. I mean, I think when it works, it can work extremely well. I do think this concept of rivalry between the two sides is wrong, right? So there are products, there are services the banks are actually fine to give up. And SME is maybe one where, I can't remember who came up with the stat earlier of how badly underserved it is. It's not particularly well served. The banks kind of know that. They know it needs to be improved. There's regulatory pressure, political pressure on them to improve it. There's certain subsets where they'd love to find the right partner to access those customers where maybe it's not economic for them because of the KYC, because of the compliance burden. So they're actually fine to work with a partner to service that. Or they get to reaggregate volumes, which would be too fragmented for them to target individually. So cross-border FX for SMEs is a great example of that, or even retail customers as well. So there's actually lots of ways to collaborate in a really positive way. And there's a lot of success stories in that space as well.
Absolutely. I want to now look at the risks and challenges, right? For all the momentum, there are still risks. Digital divides, uneven regulation, and potential over-indebtedness. Joy, what red flags do you see most often in your reporting?
Actually, all of those. I think digital divide is something that everyone talks about, especially the governments. And so increasing digital connectivity is definitely a common talked about governmental policy goal, etc. So that's really big. I think the biggest concern maybe at the moment is the over-indebtedness through the likes of buy now, pay later, BNPL. And I just think about, like I was at Money 2020 in Amsterdam in June, Money 2020 Europe. And it was very interesting because I'd been there a few years before and it was all BNPL. Everybody was BNPL. This year, that wasn't the case. Nobody was talking about it. And I think it's because the regulators have really come out and are looking at it. Because you think about the FCA has announced regulations for BNPL will come in play next year, 2026. The EU's revised Consumer Credit Directive is also bringing through some standards, etc. There's a lot of concern over the fraud around BNPL, which has really been going up, and fraudsters have been capitalizing on the rapid onboarding and quick identity checks to orchestrate really large-scale fraud. I read something about desperation fraud, which is on the rise because of the cost of living crisis that we're seeing. Individuals that are under financial strain are using BNPL services to obtain credit they know they can't repay. So I think that's a big concern, and regulators are starting to crack down on it. It was interesting, like a few years ago, again, tons of banks were going, oh, how can we get into the BNPL arena? And some have already left.
Yeah, now they're saying, hell no.
Yeah.
How do we get out of it?
Yeah, yeah, or at least they're much more cautious.
Yeah. And I think you're absolutely right. When we look at the regulation about BNPL, it was the hot topic. 2 or 3 years ago, everybody wanted BNPL. The sad reality is now we're seeing customers use BNPL for groceries. It's no longer a nice to have or high value purchase. It's the necessities.
In this blog that I was reading, it was like even medical services. You're like, wow, that's incredible, right?
Can I be a bit controversial there?
Yes.
I do think there's a role for it. Properly regulated, appropriately priced BNPL is a great thing to have out there in the market. It needs to be regulated correctly. We do need to be aware of things like over-indebtedness, how this is reported into credit bureaus. But fundamentally, to me, there isn't a issue with the concept of BNPL, because this almost gets to those macro things we're talking about again, right? The democratization of finance. Not everyone has the same access that maybe we have to finance today. I've got a credit card in my pocket. I can get a overdraft facility, a loan, a mortgage. It's very easy to access that. Not everyone has that benefit. BNPL actually performs that function for a lot of people, and where it's appropriately priced, appropriately charged, we actually even see it step into those roles in markets where maybe credit card adoption hasn't been taken up. It's roughly the same price as credit cards. People are using it to give themselves that 30-day period to pay. And that actually feels to me quite appropriate that I'm allowing more people that ability. And take the grocery points, take the points you were raising, which are incredibly valid. I just wanted to take the counter on it as well. That to me, I feel people almost have the right to make that decision. I need to borrow. It's better I borrow from a regulated institution than an unregulated institution. And if I need to defer that payment for my fridge that has broken, actually BNPL plays a great role there. If I want to take a longer term time horizon view on putting solar in my home, the finance does have an appropriate role, and it will be priced differently as well based on the risk profiles of those individuals. I guess I'm probably more focused on making sure it's done appropriately. I'm probably more focused on making sure the regulation's correct. And how do I make sure that that pricing is appropriate? Let's lower that cost. Let's get the KYC pieces we were talking about earlier. Let's make sure these are reported to the credit bureaus in the country so that we can make sure that there's not over indebtedness and people are actually building a credit profile by this high cost debt, and then they get to borrow cheaper later. So there's a few things that on the surface can look like just because it's termed BNPL, it's bad. There's bad operators. There's really bad operators in that space. And then there's much, much better operators in the space. And again, this is one where subject matter expertise is probably critical. And then the geographic nature of it and how that BNPL is important, how it's regulated. There's so many nuances, but it maybe feels a little bit wrong to be stepping in on that. But it is one that I feel the borrowing and lending aspect of it can have a positive impact if done correctly.
Absolutely.
Yeah, I agree as well.
What's really important is saying, yes, it is a red flag, but if you regulate it, if the execution is done correctly and well, it can be extremely powerful. I mean, we are huge advocates for BNPL, especially in markets where customers have no such thing as a credit score. They have no access to credit. BNPL can be a wonderful way to say, okay, let's give you $50. Let's see if you can pay it back. Let's start to help customers build up credit scores so they can actually graduate into credit customers. And so you're absolutely right, Adam. It plays such an important role, but it's all about how do you execute? How do you create literacy and manage the risks across the board? So, looking ahead, the future of investing in inclusion. Looking forward, the next wave of inclusion could come from entirely new tools like AI, digital ID, which we've spoken about, or tokenization. Adam, if you had to pick one kind of investment that will have the biggest impact on inclusion globally over the next 5 years, what would it be?
I think when we take that much of a step back and look that far forward, it has to be AI. AI has that potential to lower the cost to serve. One of the hottest topics we probably discussed in this discussion, but it goes much more than that. It can onboard people faster, cheaper. It can automate that process of customer verification we're discussing. It can help with the credit underwriting using data and the AI models to extend that credit responsibly is the important aspect of that. But to those people that you were just discussing without those traditional histories, on the customer service side, so once you've got that customer, you then need to maintain them, how you lower the cost to support them. But I think we're a little bit nuanced in this. Like, we look at the current footprint of portfolio companies, many of them are already using AI. They've actually got this massive advantage against some of the incumbents we're talking about, the banks and so on, because these are digital first companies. They're not AI native companies. I will draw that line. But being a digitally first company means you've got the data, you've got the analytics to extract this value of AI. So we actually think they're interestingly positioned, but we know we'll see transformational change in this sector going forward. I think the final pieces, so AI is reducing costs, creating efficiency, servicing customers better. It's this concept of personalization, right? Can we tailor the product even more to that individual customer? And that's one that maybe we see quite strongly coming out of the democratization of finance. How do we get appropriate savings advice, lending advice, insurance advice into customers' hands? And then one of the things we're getting increasingly excited about at APIS is agentic AI. So not only using it for the credit scoring, but can it be used in an appropriate way for decision making and actually taking actions through the use of agentic AI? So I think when you package that all together, there will be exciting new companies. There will be exciting existing fintechs that are able to leverage this quicker. And maybe I'll be wrong. Maybe there'll be some incumbents that actually find ways to adopt AI to transform their business models as well.
Absolutely. I think we're seeing AI, like we've been saying, changing the game in lots of different areas. And I think the players who are doing really well, like you just said, are the companies who are already digital first. They have been investing in data. They do have data lakes. Now it's about saying, okay, how do I extract the right data, the right insight, right? And so you're absolutely spot on. When we look at it as well, a huge thing that you touched on is hyper-personalization, because customers are no longer loyal to the big brands. They are loyal to the companies who know them, who say, okay, you're going on a holiday. Have you thought about this insurance? Have you thought about shopping here? There's a discount at this retailer. It's really about hyper-personalization and, again, being proactive and thinking about what comes next for the customer. So absolutely key. And I'm so excited that you guys are focusing on that, because that's the kind of thing that I need.
I mean, we just spent a lot of time thinking 5 years, 10 years ahead, because that's the investment timeline. We publish a lot of white papers, and it's really interesting how we pick these themes. Then we deploy the capital, and then we try and think, what's the next 5 years, 10 years ahead?
Incredible. And Joy, same question for you. What trend or technology do you think will most deepen the democratization of finance?
Well, I do agree about AI, obviously. AI is going to change the world, right? I was on this panel, but the question posed was sort of like, oh, when we have agentic AI, then everyone will be smarter. And I was a bit like, well, no one will be smarter, actually, because you've just outsourced the decision to something else. So I think financial literacy is super important. And you can use AI to increase financial literacy and all that kind of stuff. But I think that's something that we can't leave out of the equation, because we need to be able to hold the agentic AI to account in some ways. The other thing I just wanted to mention, like obviously I was really big on digital identity throughout this whole podcast. But the other thing is open banking / finance. Like I do think that open banking obviously has gone a certain way in starting to democratize finance across the board, etc. But I do think the idea that move to open finance, where you actually have all your financial health, you can actually ascertain everything. I think that will make a huge difference going forward. So I think, yeah, that would be my 2 cents on it.
Absolutely. I mean, giving customers a holistic view is so important, right? That is absolutely key. And, when you look at, yes, digital identity is extremely important, but also really just making sure that when you look at literacy and, financial literacy, it's one of the key things I think that drives us as a business, where we really focus on emerging markets, is yes, we can use AI, but use it in smart ways. So we have a customer, and what they're doing, obviously they're in South Africa, it's a new digital bank. And what they are doing is they're using AI to change the wording that they use in a text message to a customer. So if they know that the customer is slightly older, it'll be a longer message. It will be more detailed, really explaining it to the user. Whereas if it's a younger, someone in their 20s or 30s, it's a very short, quick, this is what you need. Here's your OTP. And so they're using AI in a really smart way to just target the message correctly to the audience. And so it's all about doing it in a way that makes sense. It's not going to fix everything. It's really about using it in the smartest ways possible. So spot on. Thank you for that, Joy. And that brings us to the end of this episode of the Issuer Academy. We've explored how global investing isn't just about returns. It's about creating access, affordability, and opportunity across the globe. A huge thank you to my guests, Adam Battersby from Apis Partners and Joy Macknight, for their insights. And thank you all for listening. Catch you next time on the Issuer Academy. That wraps up today's episode of the Issuer Academy, Paymentology's podcast to innovate, scale, and provide impact. I hope you're leaving with fresh insights and actionable strategies to help you revolutionize your card programs and drive true impact in the world. If you've enjoyed today's conversation, please leave a review to help us reach more pioneers like you. Also, be sure to subscribe and follow us for more inspiring episodes and behind-the-scenes content from Paymentology. Until next time, I'm Merusha Naidu. Keep innovating, keep scaling, and keep striving to make an impact.